Hey, good morning, everybody. Welcome to a Monday morning, last day of the quarter, last day of September. And you know what? Kind of the first real weekend of football. If you are a fan, there were some pretty amazing games, not only at the college level, but also at the pro level yesterday. But we're not here to talk about football. We would be talking about that for all day. We're here to talk about the markets and what's going on. Market's pretty well flat today. I'm going to lead us off today by talking about the one name that is up over the market. It's up 1.5% or so, and that's Apple. Apple's got the new iPhone 16 out as well as some other products. Stock's been going strong despite some of the SaaS talk, if you will, from folks out there saying that it shouldn't be this high. Then I'm going to transition over to Mike, who's going to talk about something that you either are directly upset about or you intentionally don't even look anymore because it would make you upset. And that's auto insurance. I mean, I have two teenage drivers. I choose to look still, but sometimes I wish I didn't on how much we're paying in auto insurance. But, Mike does a great job of talking about inflation across the board, but specifically he'll talk about, in the insurance space and specifically auto insurance. It's crazy. Mike obviously has some expertise in this area, and he's going to give you some tips on how to mitigate the rising costs of that. And then last topic will also be Mike talking about some of the turmoil, if you will, with CVS/AETNA. Some activists are getting involved, and anytime activists get involved, there's generally going to be some changes afoot somewhere or the other. If you're a Southwest flyer, you're probably reading all about the folks that are getting involved that are taking away not next year they're going to have assigned seats and, challenging a lot of the other business models. Well, Mike's going to talk about what's going on in that space and really, dig into what potential changes we might see there. But before we get started, it's a financial education presentation. You have to do your own due diligence before acting upon anything you see in this presentation. More disclaimer information is available at ankerstarwealth.com, and the opinions expressed are Mike and mine alone. All right, let's start with some Apple. Get us over here to CNBC.com. This is the market as it is right now. Really, you would just kind of call it flat, if you will. It's been red most of the day, so it's kind of melting up, if you will. But toggling over to Apple specifically is up, 1.7% or so. And why? There's really not news. Well, here's what happens with Apple is they're almost in new all-time highs, which is back into, it looks like late July there. If you go across the chart, this is a year-to-date chart. It is Apple, every time they come out with their iPhone cycles, it's there aren't enough changes. It's the same as the 16 is the same as the 15 but now my charger won't work, or all the standard like griping of the consumer, if you will. But the tech folks who sit back and really analyze these changes and compare it to the latest from I don't even look at the other Google products because I don't want something to like lure me away. But I mean, I know there's other good competitors out there, of course, and really it's their job to kind of say, hey, is Apple keeping pace with everything else or outpacing the competition? And they have, really. When you look, I've had the iPhone 16. I'm sure I've unlocked like 1% of its new capabilities or whatever, but certainly being able to pick it up and it acts like a camera. It's got a little camera button. Like, you remember old school, like old days, like Mike and I, from way back, you pick up your phone, you can actually just take a picture. You don't have to use your face to log in and put in codes and all that stuff. So it's a lot faster, that's for sure. And I'm sure there's a whole bunch of other stuff. But if you're sitting back worrying about your Apple stock, I would not worry about it. Apple continues to be the best company out there, in my opinion. They're buying back their stock hand over fist. When you look at the performance, it's up 20% year to date. That's on the bottom right here. They do pay you a little bit of dividend while you wait, which, I've been in over 20 years, so it does add up. And then over here, if you get into valuation, if you want to nerd out on, P's and forward P's, well, earnings per share pulling in $6.50 per share. Current P is 35 and the forward P is lower. So what does that mean? Well, two things: share buybacks are reducing the number of shares outstanding, as well as they're making more money. That affects that ratio out there. So they're trending in the right direction. We talk about the jockey and the horse. Love the horse, the jockey, the leadership team, Tim Cook, and all the folks that he's hired have all done a masterful job of this. So I do not worry about Apple at all, and I think we'll be seeing above 240 here soon. All right, I will stop sharing. Turn it over to Mike. And we talked about the funness of Apple and iPhones and stuff. Okay, yeah, they're a little expensive. I got that, but so is car insurance. So Mike, over to you.
All right. Steve got to be the good cop today. I get to be the bad cop. And we have talked about inflation quite a bit, and auto insurance has went up. I mean, obviously, home costs have went up a lot too, but percentage wise, auto insurance has went the most year over year. It's like 20% year over year. So what you paid a couple $100 for, a few years ago, is several $100 more. And the more kids you have, the more expensive it is. It is just insane. And yeah, I don't even want to think about my auto insurance bill. So we'll just say that's what it is. A couple reasons why cars getting fixed nowadays, they got so much electronics in them, it's a lot more expensive to fix them. There's also a lot more kind of one-piece models. So where it used to be, oh, we just dented the fender, replace that. Now you got to replace, so much more. So those are some of the reasons, and I don't have it confirmed. I haven't seen it, but my wife and I both think people text and drive a little bit too much. There might be more accidents, but we're not sure on that one. But anyways, the article actually tries to get to the positives. How do we mitigate rising car and home insurance costs? Now, I'll speak specifically to car insurance. Every year that you drive your car, it goes down in value. So therefore, technically you're insuring less. So if you totaled it in year one, it was worth 50 grand, you get 50 grand. But if you total it in year three, it's only worth 30 grand, you only get 30. So it seems like auto insurance would go down in price, but it doesn't. So that's where you get stuck. And that's why the number one recommendation is you got to shop your auto insurance. I'm not saying every year. I'm sorry if you work for Allstate, State Farm, whatever, Progressive, and you're like, oh, I don't want to hear from this guy. You got to shop it. You as a consumer, maybe every 2 years, call through all the auto insurance, get quotes, got to bundle your homeowners in there too to get the best discounts, and then make a decision based on that. And oh, by the way, we don't sell insurance, so I guess I can say that. People that stick with their auto insurance or homeowner insurance year to year, I mean, they're the ones that just keeps going up while the price of what you're insuring goes down. So that's a recommendation. August 2023 to August 2024, it only went up 16.5%, which is actually declining as far as from 20% year over year before. And even when you see the average cost for full coverage car insurance, $2,348 a year. As a person with multiple teens driving, I would love for mine to be only $2,348 a year, and Steve probably would too. So that's the auto insurance side. I'm not going to say homeowners as much because, if you live in Florida or California, I mean, a lot of places are canceling policies because there's so much risk there. But I'll just say it never hurts to shop around and use Marketplace to get the best deals. So let me move to another type information that deals with insurance. So CVS, and that's when you think CVS, I think, isn't that Mary Lou Retton? I can't remember. Wasn't she CVS?
I don't remember her being the spokesman for CVS.
Maybe it was a different one of the pharmacy drugstores. I could have sworn it was CVS. Google that in the background. Send our stat checks out there. So anyway, CVS, they purchased Aetna a few years back. Aetna, you've heard of. They're the third biggest health insurer. And while the concept of integration makes sense, so obviously the idea was set up. You take our pharmacy, we'll do some kinds of healthcare in the office there. It'll save money. It'll go well. It makes nobody else is doing this. You go to Walgreens, they don't own United Health. I mean, so nobody else is doing this except for CVS and Aetna. So that's what they did. That was the idea. So how's it worked out? The drugstores, there's so many of them. Walgreens and Walmart, Kroger. I mean, there's drugstores up and down the street where I live. I'm amazed because they have highly paid pharmacists working there, and there's a lot of them. So CVS, the drugstores, competing against all those other ones. And then where healthcare's got in trouble, and it has to do with inflation, is the cost of healthcare has went up and up and up. But if you are Medicare or Medicaid, it's reimbursed by the government, and the government sets the rates that they'll reimburse at. So unlike your employer where they just get charged more and pass it on to you, the government says, we're not paying. We're not paying any more. We're only going to pay a 3 or 4% increase, and I don't care if it went up 20%. So then what happens is the insurer gets caught in the middle. They've already paid the doctors, but the government says, we're not going to pay you what you paid the doctors, and the insurer gets caught in the middle. And that's what happened to United and Elevance and Humana and Aetna within the CVS umbrella earlier this year. So activists are getting involved. You know, I'm going to show you the share price, and you'll see exactly why they're getting involved. So this is a graph of the year to date. The blue line is CVS, and the green line is the S&P 500. So if you started in January and you had the S&P, you're up 20%, and if you had CVS, you're down 20%. That's a 40% spread. That's pretty ugly. And then if I go back even 5 years, you can see early in the cycle, CVS was actually beating the S&P for a while. But then if you look at since then, I mean, a 5-year graph, S&P is up 94% and CVS is up 2. That is why activists get involved. Whether they split the company, break out some different things, put pressure on management, it's a tough business to be in. I'm not sure there's any silver bullets. The activists may get involved and force something and the price goes up 20%. And the activists like, we're out, we made 20%. Sometimes that happens. I'll give you one example where an activist got involved, and I listened to this on Business Wars. They got involved in Blockbuster because they were competing against Netflix. And they said, hey, we're gonna beat Netflix. You guys know how this ends. And Blockbuster ended up going bankrupt. But when I listened to the CEO from Netflix talk about it, he said Netflix was within 30 days of running out of cash and going bankrupt, but the activists got involved and pulled Blockbuster's online competition. So that's a time the activists thought they were doing something good and killed the company. So anyways, that's what I've got today. And then, as far as healthcare, we don't want to, run up healthcare unnecessarily. And if you look closely at my face, you see that the fastest growing sport in the United States is pickleball. And Steve, you wouldn't think you could draw blood in pickleball, but I drew blood in pickleball on myself. But no insurance.
I was going to say,
claim.
You drew it or somebody drew it upon you?
I had to make that diving stop, and I somehow hit my watch into my nose, and I was bleeding on the court, and they were like, we've never seen blood on a pickleball court. And I said, till now.
Well, couple questions. Did you win the point?
I don't know. My concussion hasn't passed yet. No.
Okay, yeah. Once you can see again and your hearing returns, maybe we'll get some witnesses to see if you won the point. And did you die? No, you didn't die. You're still here. So whenever I hear the fastest growing sport in America, I say fastest growing in sports injuries in America, right? Old people thinking they're athletic. Pickleball. I remember playing it in our high school. Do you ever remember playing it? I remember in our gym it was like, what is this? It's like tennis but dumber. It's like tennis, but anybody can play real quick. It's like whatever.
And Steve and I are experts at tennis and table tennis, the other sides of the span. Pickleball is the in-between sport. Yeah,
it's always fun when you can take a racket and hit the ball as hard as you can, especially when you can hit it at your buddy. But anyway, so good stuff there, Mike. I did happen to look up the Mary Lou Retton mystery. You're kind of like, you're right without being, not exactly right, but your memory is way better than mine. I was like, yeah, I do remember her doing a bunch of commercials. It was Revco was the company. And then in 1990, she did the commercials from 91 to 94. In 97, Revco merged, got bought by CVS. So
there we go.
There you go. There's the mystery solved. When you had that chart up, we don't need to put it up again, but there's one thing that has changed with like CVS and Walgreens for me is two things have changed in my own personal like data point is I used to go there to buy expensive stuff, when I don't want to go all the way to Walmart to buy toothpaste. I just go grab it right there because I need it because it's like right now, right? But now I don't do that anymore. You can order that stuff online. It's there. A lot of times it's there within 2 hours. right? So it's like, oh, I'm out of shaving cream. It's like, well, I can buy it cheaper from Amazon and have it delivered my door than pay 3 times as much to go drive to the CVS. And our CVS got a Quick Trip right across the street. Has Ohio been hit by the Quick Trip craze?
That
I
like
mean, these
Speedway or 7-Eleven or
well, Quick Trip has they're basically they're everything but the pharmacy, right? They don't have the pharmacy,
okay.
but they have everything else. So it's really pretty awesome. And if you ever need a meal, I mean, the kids love it, right? It's a one-stop shop for everything they could possibly need. It's like Bucky's is like up here, and
Yep.
then Quick Trips down here. But all right, enough for today. Good information out there. Hopefully the markets stay in the green here today, and we close out the quarter strong. As a reminder, we'll have some end quarter closeout coming up tomorrow with just some quick look stuff, and then we have our investment advisory board. If you're a client, you'll get the invite for that here soon to have Mike tell us exactly where we are and where we're going with the book. So with that, we'll let you guys go, and we'll talk to you next time. Bye.